Welcome to Business Brief for today. It's August the 10th, 2026. And now the chairman of the Nigerian Revenue Service, Zach Adedeji, says Nigeria's fuel subsidy could have cost the country as much as 53 trillion naira if the policy had continued now. While the naira could have weakened to about 3,500 naira to the dollar, Adedeji made a projection during an interview on television where he highlighted the fiscal and foreign exchange pressures associated with maintaining the subsidy regime.
If Mr. President has not removed it, given what is happening in Iran, given what is happening globally, and the total budget of Nigeria today is 63 million, imagine that this unsubstantiated, unsustainable is now 53% of the total budget. That is roughly 76% of the Nigeria budget on subsidy alone, if Mr. President has not taken that courageous decision. So it is not what people think it is. It is people should have considered where we will have been. And I tell you the ripple effects of that. The exchange rate today will have been roughly at 3,500 if that has not been done.
Now, Adedeji said continuing the subsidy would have required government to commit huge resources to keeping petrol prices below market cost, placing additional pressure on public finances and the country's foreign exchange position. He argued that removing the subsidy helped reduce some of those pressures while allowing government to redirect resources towards other areas of the economy. He says, however, the subsidy removal has also come with significant cost for household and businesses as higher petrol prices have increased transportation, logistics, and operating expenses. The debate therefore continues over whether the long-term fiscal gains will ultimately outweigh the immediate pressure on consumers and businesses. Nigeria equity market closed the week higher, but the modest gain masked a broadly negative market as investors concentrated on buying on a handful of banking and large cap stocks. The NGX all share index ASI rose 0.12% week on week to about 245,000 points, while market capitalization increased by about 187 billion naira to 158.51 trillion naira. The market's year-to-date return also climbed to 57.81%. But market breadth remained weak, with 26 gainers against 63 losers, indicating that the latest advance was not broad-based. Leading the gainers was Ava Capital, which jumped 33.33% to 11.00 naira. It was followed by FCMB Group and First Holdco and Fortis Global Insurance and Linkage Assurance as well. On the other hand, Thomas Yachts Nigeria recorded the steepest decline. Trans Nationwide Express dropped, Critical Minerals Finance Corporation, while EcoBank Transactional Incorporated, or ETI, declined to 18.94%. Consolidated Hallmark Holdings also lost 16.51%. The banking index was the best performing sector, gaining 2.33% on renewed demand for FCMB, First Holdco, and Access Holding. With more corporate earnings expected, investors' attention is now shifting to company results, dividend expectation, and interest rate movement for clues on the market next direction. The federal government is moving to position Cross River State as a major livestock production and export hub, with new infrastructure expected to strengthen the sector and connect producers to international markets. The partnership was announced during the commissioning of Nigeria's first livestock control post and guarantee facility at Umkom, designed to strengthen disease surveillance and ensure that only healthy livestock enter the country. The facility is the first of 12 control points planned along Nigeria's international borders. And of course, let's hear from that event.
Build this health control post and quarantine center to certify the health of animals that are crossing into the country, because transboundary diseases are of significant importance to our economy and the economy of every other nation.
Minister of Livestock, Idi Mukhtar Maiha. Of course, the minister says plans are underway for a modern abattoir capable of processing about 500 cattle daily. but the project is expected to create up to 10,000 jobs across livestock production, feed manufacturing, transportation, cold chain logistics, and meat processing. The federal government is also assessing the redevelopment of Obudu Ranch, while Cross River says its cargo airport, now about 85% complete, is expected to support the movement of livestock and other products to international market. The broader plan is to move livestock production beyond subsistence farming, strengthening Nigeria's red meat value chain, and position Cross River as a gateway for livestock exports. And that's where we leave Business Brief this morning. Many thanks for being part of it.